It's Wednesday, February the 12th, and I'm David Song, currency analyst with Daily Effects, here to cover the January Australian employment report, where we're anticipating a 15K rebound in job growth, especially after that very dismal 22.4K drop last time around. But however, recent trends, especially when we take a look at the data, the second half of 2013, large trend was the fact that we did see this print miss market expectations. So we might see a similar dynamic this time around, especially after we heard those comments from the Reserve Bank of Australia as they anticipate higher unemployment going forward. And at the same time, earlier this week, we heard Toyota Motor Company is also going to close their doors in the $1 trillion economy. So again, this could not only be a broader thing to watch near term, but also might see this weakness in job growth continue to take shape over 2014. But on that, guys, there's a few trade setups that I'll be watching for this event specifically. So first off, we'll look at the Aussie dollar. I'm still retaining my bearish long-term outlook here. We're still, I would have to argue, in a correction right now, and we'll see if we could break or get some fresh yearly highs in this index, especially for this exchange rate as it approaches that January high. But again, we'll see where things close later on today. If we do close again back below this 90.50 region, again, could be suggestive that we could be topping out relatively soon for the Aussie. And again, a dismal employment print could put this high yielding currency under pressure, especially as I still feel that the RBA still has some room to lower the benchmark interest rate further. But in terms of trade setup, another one that I'm going to be watching specifically a little bit more short term is going to be the Aussie Kiwi. One of my trades of the year. I think it's at a very good turning point here. Looks as though it's still trying to carve out that lower high just below that 110 handle. A few things to watch here though. One thing I'm waiting for some clarity as well as some conviction is this RSI structure, nice bullish trend that has been taking shape, especially coming into February. But looks as though we're in a little bit of a trouble here, especially if we break to the downside. So on that, guys, might have a lower high in place, and on a result of that, could see some further declines coming in play as we head into especially the March RBNZ interest rate decision, as again, that central bank market expectation is that we could potentially see a rate hike in March. So on that, guys, another trade setup, especially with the Bank of England quarterly inflation report out of the way. I'll also watch Pound Aussie. I've been largely talking about this trade, very popular in the Daily Effects on demand room, but right now also, are we at a higher low at this juncture as it continues to hold above that 81.30, 81.40 region? So on that, guys, also when we look at the RSI structure, very longer term, still sort of preserving this bullish momentum that we've been taking note since last year, so we'll be watching that dynamic as well. If we do see a nice turn in the RSI paired with a more meaningful topside break, a breakout out of this range, maybe a closing price above this 83.40, 83.50 zone could be very indicative that we should be watching some of the topside targets, maybe even see a higher high in place as it looks as though, again, we're carving this nice base just around that 81.30, 81.40 region. But again, guys, with that said, just watch the data. We'll trade it as it comes, but don't be surprised if we do see that data print miss market expectations. But on that, guys, as always, stay prudent ahead of these key data prints, and also good luck on your trades.